Welcome to the complete history of term life insurance in Canada. Curiously, the term life insurance policies that we have in Canada today didn't just happen organically. There's actually a number of cultural changes, flashpoints in the industry, and influential people that we've seen through the years that have given us the robust marketplace and types of life insurance, term life insurance policies that we have in Canada today. The first documented evidence of term life insurance goes back to 1756. Now, back then, an actuary by the name of James Dodson wrote a paper titled First Principles in Insurances. That paper talks about pricing a whole bunch of different types of life insurance, and it just kind of incidentally or tangentially mentions 1, 3, 5, and 7-year term insurance. Now, I believe that was really meant more as of a technical exercise. It wasn't even called term life insurance. It was called term certain. And the reason for that is back then, mid-1700s, were really pre the Industrial Revolution, and people didn't go out and work 9 to 5 and bring home a paycheck and support their family. Life was very much different back then. So there was limited need for term life insurance. So that stayed the same until the late 1800s, maybe the early 1900s. Now we're post the Industrial Revolution, and people, in fact, are going out to work 9 to 5, bringing home a paycheck and supporting their family. So we now actually have a need culturally for term life insurance. Unfortunately, the answer to term life insurance wasn't term life insurance back then. The response to people working was actually something called industrial insurance. Now, industrial insurance were small policies that covered life insurance and disability insurance and generally covered your whole family. And curiously, and perhaps horrifyingly, the premiums were collected by your insurance agent weekly. That's right. Every week, you got a knock on the door from your life insurance agent. Where's my money? Give me my money for your life insurance. So that existed up until, like I said, the late 1800s and early 1900s. Now, let me just give you some proof of that. Here's a book, an actuarial book from the late 1800s. It only talks briefly about 5, 10, 15, and 20-year term. Here's another book, very technical book called Principles of Insurance from the early 1900s. It only briefly mentions this book actually doesn't even mention term life insurance. It talks about all the other types of life insurance. Here's an agent book from the late 1800s. He talks about his life insurance policies that he sells to his clients. These policies, term life insurance, isn't even mentioned in this book. Here's another book from the early 1900s. This is more of an agent book. It talks about term life insurance, and there's two curious points I'd like to make. First of all, when he talks about term life insurance in this book, he mostly contrasts it with permanent life insurance and says, kind of the intent is, you really should be getting permanent insurance. But he also mentions not just term insurance, but renewable and convertible term, and he mentions that renewable term really wasn't a thing back in those days, even though today it is. So renewable is something and convertible is something we're going to see from the 1900s right up through to today. There's a lot of discussion and back and forth about this. So renewals back in the early 1900s weren't really a thing. The agent does mention, however, that conversion, so convertible term, is a very important feature. This is going back over 100 years. So that takes us up to the early 1900s, right through to actually about the mid-1900s, up to about 1950 or so, when term life insurance existed, but was very much a niche product. Let's move to the 1960s and 1970s. At that time, life insurance agents in Canada were tied to one specific company. You had to sell that life insurance company's products. And if you wanted to sell another life insurance company's products, you needed a piece of paper for every time you did this called a single case release. It was a permission from the life insurance company for you to sell another company's products. So as you can imagine, life insurance agents were required basically to sell their company's products, and specifically what the company wanted you to sell, which wouldn't have been term life insurance. Then something happened. A company called Transamerica Life actually started sponsoring agents, and instead of requiring them to have a single case release for every single case, they handed them a full stack of pre-signed single case releases and said, here you go, don't even talk to us, go sell whatever you like, whenever you like, and you're probably going to sell a lot of our stuff because we've got really good term life insurance policies. And sure enough, that's what happened. People such as Art Grimes and Buck Scott were the very first life insurance brokers in Canada, sponsored by Transamerica, and they started doing what was best for their clients, which in many cases was starting to sell term life insurance. Now, I don't want to minimize how important these people were in the creation of the environment we have today. These were really the forefathers of term life insurance sales in Canada. In fact, they were completely outside the industry. The industry didn't work that way. The regulations didn't work that way. These people were bucking the trend, and it was so important to them to be able to do this that Buck Scott actually mentioned this in his obituary. Let me read you a line from Buck Scott's obituary. Buck was proud of pioneering term life insurance in Ontario and later helping usher in the brokerage system that allowed him to serve his customers best. So his family recognized his important contributions to the system we have in place today, as do I. So now, in the 1980s, something else happened. Again, this is a bit of a flashpoint. We had the introduction of the personal computer. And what the personal computer let us do was it let you compare prices across a whole variety of companies. So these same rebel Transamerica brokers that were out there selling term life insurance now could actually sell or shop out, do those premium comparisons that are all over the internet today, and shop out the 60 plus life insurance companies and start selling the cheapest. So in the 80s, the introduction of the personal computer let these rebel brokers start selling based upon cost. Prior to that, this wasn't possible. So now we're in the 1980s. Now, in the 1980s, two very influential people emerged in Canada. Actually, one of them came from the States, that helped drive consumer awareness of term life insurance. The first person's name was Art Williams, or A.L. Williams. He pushed out a sales strategy called buy term, invest the difference. Now, this concept isn't perfect, but one thing it does do is it polarizes people. It cuts everybody right down the line. You're either for term insurance or you're against it. And of course, since he was promoting term insurance, the answer was you should only ever buy term life insurance. So again, it was a little bit of a controversial sales strategy, but one thing it did do was it really was easy for consumers to understand, and they got the idea that they really should be looking at term life insurance first. The second influential person was a fellow by the name of David Chilton. David Chilton wrote a book called The Wealthy Barber. This book was wildly and spectacularly popular. Everybody bought a copy. I've got a signed copy because I met Dave when he wrote the book. Here's what he has to say. Here's a direct quote from his book. There's two interesting points about this quote. Although, as you pointed out, there are a number of different types of policies, there's only one that you, Kathy and Tom, will probably ever need: renewable and convertible term. So the first thing that's noteworthy about that quote is he says you really should be buying term life insurance. There's only one type of policy that you need, and that's term life insurance. Secondly, he doesn't just say term life insurance. He says renewable and convertible term. And I think that's important. I don't think David Chilton said that arbitrarily. I think he's being very specific that you don't want just term insurance, you want renewable and convertible term, which we already saw another author talking about this going back to the early 1900s, if you remember the earlier part of this video. So Art Williams, David Chilton in the 80s, two very influential people. What they did was they brought term life insurance to the awareness of Canadian consumers. Now, round about that time, actually a little bit later, late 80s, early 90s, we had a shift in the marketplace. So what happened was a number of American life insurance companies actually moved into Canada and brought their American life insurance types of term life insurance into Canada. And American term policies and Canadian term policies at the time were not the same. So the way Canadian policy worked at the time was you would take a medical exam, get your policy for the term, let's say 5 years, and at the end of the 5 years, your renewal premium, so the premiums at the end of 5 years, were the same as somebody at that age who just bought a brand new policy and took a medical exam. So you'd be 30 years old, you buy a 5-year term at cheap rates, and at 35, without taking a medical exam, if you kept the policy, you got the same premiums as somebody who was 35 who bought a brand new policy and took a medical exam. So you didn't take a medical exam, you got the same prices as somebody that did. American policies didn't work this way. They had cheaper term premiums up front, but at renewal, the pricing was based upon the idea that you hadn't taken a medical exam recently, so we don't know what your health looks like, so therefore the renewal premiums were much higher. The result of this was Canadian policies were a little bit more expensive up front, but cheaper later. American policies were way more expensive later, but a little bit cheaper now. Now, the result of that was, you remember those computer shopping systems we're talking about? The American policies were showing up top of all those shopping systems. When agents were running those multi-company quotes, the American companies were all coming up top. The result of that was two things. One, Canadian companies shifted over the years, through the 80s and into the 90s. They shifted from their initial structure over to an American style of term life insurance policies where renewal premiums are much higher than they were. The second thing that did was, the impact of that was, it effectively killed 5-year term, because what you used to do was buy a 5-year term, and every 5 years you got really good rates. Why would you pay the higher premiums on a 20-year term when 5-year term was cheaper and you had great renewals? So what it meant was 5-year term really went by the wayside, and longer terms such as 10, 15, 20, and even 30-year term now very much became the standard. So 5-year term is only rarely available on the marketplace now, whereas back in the 80s and early 90s, it was a very popular type of term life insurance policy. And now we're into the 1990s. Something happened in the 1990s. A new type of term insurance. Now, this is actually arguable. Some people call it term, some people call it permanent. It was basically a blend of both term and permanent insurance called Term to 100. Term to 100 was like term insurance in that there was no cash values. It was like permanent insurance in the sense that the premiums weren't level for 10, 20, or 30 years. They were level for life. So it was kind of a blend of both types. Unfortunately, well, I guess perhaps fortunately, the policies were priced incorrectly. They used something called lapse-supported pricing. That's outside the scope of this video as to what that actually is. Needless to say, it was priced too cheaply, which was good for consumers because they bought a ton of it, but the prices simply weren't sustainable. So eventually, over time, the prices on Term to 100 premiums went up, and it became much less of a bargain. Now, let's move forward to about the early 2000s. By the early 2000s, now we've got a new factor in play, the internet. Around about that time, late 90s, early 2000s, people were going online. They had PCs at home and they had access to the internet. And I actually put online the first Canadian multi-company quoting system on the internet for consumers. That quickly went viral. A lot of websites started offering that kind of stuff. It's littered all over the internet today. You can go online almost anywhere and shop out prices. And the impact of that, in my opinion, is that it really, because it let consumers now shop prices on their own at their leisure, is that it really drove competitive pricing from what we used to have, which was large variances in term pricing, down to the point today where we have difference in prices from amongst the top 10 companies are almost inconsequential. I know everybody's shopping on price, but if you look at the cheapest company and the 5th cheapest company in Canada, it'll be very few dollars difference in prices. And that's, again, I believe, because of early 2000 when these online shopping systems went online. Now, let's fast forward now to 2008, 2009. You may recall the financial crisis. The financial crisis destroyed a lot of things in the financial world. One of the things it hammered was long-term bond rates. Now, life insurance companies count on things, conservative interest-yielding investments like 40-year bonds to save for over the long term for these long-term life insurance policies. And interest rates after the 2008-2009 financial crisis brought 40-year bond rates down to almost zero, so life insurance companies couldn't earn interest. The result of that was the death of Term to 100 life insurance policies in Canada. Not too many years after the 2008-2009 financial crisis, a few life insurance companies started to leapfrog over each other, raising prices on Term 100, and eventually almost every life insurance company in Canada simply withdrew from the marketplace. So that's what we have today is Term 100 is still out there. You'll hear it in literature and stuff like that, but in the marketplace, there's few, if any, viable Term 100 life insurance policies left in Canada. Fast forward now to today, to at the time of this video, 2022, also encompassing the last year or two. A couple things have changed. The Canadian term marketplace, perhaps despite appearances, in my opinion, is actually in turmoil. There's a couple reasons for this. The first is COVID. When COVID struck, or pre-COVID, life insurance companies, when you did an insurance application, would send a paramedical person out to your home to do a medical questionnaire, and then they would do a blood and urine test. And with COVID, of course, you can't be going to people's homes and drawing blood and urine. So what life insurance companies did was they transitioned to a medical interview, either through a form or a questionnaire, or often a telephone interview. And because they no longer have access to blood and urine, if necessary, if they need additional information, they just reach out to your doctor and get a report. So medical exams changed from being an in-person blood, urine plus a questionnaire to really just a questionnaire, either through a form or a telephone interview. That was the first thing that changed. The second thing that changed was the rise of companies similar to the Term Guy, where we're selling term life insurance directly to the consumers online. You actually apply right online. There's no more direct agent involvement. But there's a bit of a discrepancy or disagreement on how to market that. When Canadian consumers are going online looking for term life insurance today, they want a variety of things. They want the cheapest prices, of course. They want instant access to their policy. They want to click a button and be insured immediately. And they don't want any medical exam. So now we have a situation where you can't actually have all three of those things. You can't have cheap rates, no medical information, and instant issue of policies. Something's got to break. Because if you don't, you've got people on death's doorstep getting the same life insurance policies as professional athletes, and clearly that doesn't work. So what breaks? So what companies are doing is two things. One is they're billing these telephone interviews or forms where they conduct medical history as a no medical exam. Is it? There's disagreement on that. You can make your own choice as to whether or not you think that's a medical exam. In fact, let me give you an example. Here's an online life insurance company called Mosaic Life. This is out of their FAQ. It says, will I need to complete a medical exam or provide bodily fluids as part of my application? And the answer is this. For most people, no. Unlike other life insurers, we do not typically require you to provide blood and urine samples to complete a medical exam. Instead, we base our decision on our online questionnaire, which for most people takes under 10 minutes to complete. Well, curiously, that is actually exactly like most life insurance companies, particularly term life insurance companies. You are just either completing a form or doing a telephone interview, and there's no blood or urine. But this company's billing that, like others, as a no medical exam. So we now have a bit of a marketing strategy where people are looking to promote term life insurance applications online as no medical exams, when in fact there is a medical questionnaire. And it's exactly what consumers want. Where you have other companies, and certainly the Term Guy is an example of this, where we don't bill that out to consumers or market it as a no medical exam policy. So what breaks? We've got consumers demanding this, all three things. They can't have all three things. So the first thing, as I mentioned, it's now being billed as no medical exam insurance. It's arguable if that's the case. Perhaps it is, perhaps it's not. It depends on your definition of a medical exam. But the second thing that's happening, is to be able to provide some version of those three things that consumers are looking for, is that policy features are now being chopped. So a number of online term life insurance policies have been released to the Canadian marketplace where they're chopping a variety of features. Some of them are actually increasing premiums, but not all of them are. And the way to do that is they chop the renewable and convertible part. So we're now seeing the rise of term life insurance policies that are no longer renewable and no longer convertible. And if you recall, we had people going back over 100 years emphasizing the importance of renewable and convertible. We had it again in the 1980s when consumer advocate Dave Chilton came out and stated in his very popular book, The Wealthy Barber, that in fact you needed to purchase renewable and convertible term policies. And today, we now have consumer advocates such as Preet Banerjee, who's recently released a video talking about exactly this. He's got a video, you can look it up on YouTube if you search Preet Banerjee renewable term, where he spends 5 or 10 minutes telling consumers how important it is to make sure that your online term life insurance policy is in fact convertible and renewable. So he talks about that in a lot more depth than we're going to go into today. So where are we at today? What we have is a marketplace that's a bit in turmoil. We've got a number of different marketing companies trying to address consumers' needs. Some of them are billing their policies as no medical policies. Some of them are dropping the renewable and convertible features. Where do we end up in the future? I think it's really going to depend on how consumers feel about the importance of renewable and convertible term. And unfortunately, that's not the importance of those features is something that consumers see when they initially purchase the term policy. It's something you don't see typically till the end of your renewal period, which often is 10, 20, or 30 years. So consumers won't recognize this for probably a decade or two in the future about whether or not they actually care about renewable and convertible term. So again, that's the complete history of term life insurance in Canada. My name is Glenn Cook. I'm the term guy.